G'day traders, Greg here with a market update. Okay, so last week we saw a very nervous market. We saw a lot of selling across most markets, but on Friday, that selling stopped. So US markets, US equity markets on Friday, we saw positive closes for both the S&P and for NASDAQ. They both closed up about 1.5%. So once again, the dip buyers came in and supported and saved the market. But look, the Nasdaq close on Friday was actually quite important. Technically, if the Nasdaq actually closed on Friday, so a monthly close because that was the last trading day of the month, closed just below Thursday's close on Friday. Technically, we would have printed a bearish key reversal month for Nasdaq. So that's a very bearish indicator, basically saying that that we have seen a top in place, those record highs, and that expect lower levels to come. So by Nasdaq actually rallying 1.5% on Friday. So it escaped, printing that bearish key reversal month. So a big positive for equity markets and for risk. With Nasdaq, pretty much leading, global equity markets over the last couple of years. Okay, so this weekend there was some big news, and obviously Trump was involved again. So Trump tweeted, just in the last 12 hours that the US government would go ahead with the strategic crypto reserve. So the US government will be buying crypto. Specifically, it's going to be focused on US crypto assets. So he did specifically mention XRP, which is owned by or made by Ripple. Mentioned Solana, Cardano. And then he also did say that he did have a lot of love for Bitcoin and Ethereum. So the crypto space was one of the hardest hit when we were talking about nervous markets and a lot of selling. The crypto market, certainly there was a lot of blood and a lot of damage done last week. Bitcoin did break below that critical support at 91,000, got as low as 79,000, so just marginally broke that 80,000. And was trading in the low 80s, when Trump did tweet about this new crypto strategic reserve. So we saw Bitcoin fly back up and trade up towards that 94, 95,000 area where it is now. And obviously all the altcoins had even bigger rallies, with some of them up 30, 40%. In the last few hours on the back of the plans for the crypto strategic reserve in the US. So look, that is a big deal. Going further out on the 7th of March, which is this Friday, the US government, specifically the White House and Trump, is going to be hosting the first crypto summit at the White House. So no doubt there's going to be some more positive headlines coming out at the end of the week with regards to crypto. So look, I'd suggest this current crypto pump is not one to sell into. That no doubt we're probably going to see crypto really like what it's hearing. And there is potential, as we know, the way that crypto trades, with some serious FOMO. So certainly crypto is going to be a big story, and it is a big story to start this week. Okay, so other markets worth mentioning at the moment. Obviously gold. Gold had a huge week last week. We did trade up to new record highs, just above 29.50 in gold, but then we did see a huge retracement and we saw gold sell off. And we saw gold sell off a good $120 from those record highs to print lows on Friday around that 28.30 area. Now, gold did close the week around about that 29.58. And technically, that was not a good close on a weekly basis, because we did actually print a bearish key reversal for gold on a weekly basis from record highs. So what that's telling us technically is, look, you can forget about, say, 3,000 targets short term. That, look, it looks like that we have printed a significant top, those record highs in the short term. Look, gold is volatile. It will trade a wider range, but certainly when you have bearish key reversals, you do expect new lows in the short term. So I would not be rushing out to buy dips aggressively on gold for the time being. Anyway, looks like maybe the bias is to be selling rallies. Okay, so this week it isn't a huge week for events or data, but today in the Eurozone we do have monthly inflation data. Headline inflation and core inflation are supposed to print marginally lower, so more progress on inflation is expected. That's a positive thing if that comes out. ECB market has actually priced in for the rest of 2025 up towards like 90 basis points of cuts. So look, certainly if we do get that progress on the monthly inflation data today, look, that's going to continue to cement those ECB rate cuts. So obviously, look, if you are trading euro, that's something that you should be watching out for. Obviously, the market, if somehow we do get a surprise and we don't get that progress in inflation, there may have to be a lot of repricing going on. The other big data print is at the end of the week, and that's non-farm payrolls, US employment data. That has always been printing solid, literally for the last 12 months. Last month it printed above 180,000 on headline. Market's expecting somewhere around 147, 150 on the headline inflation. Jobs number, which will still be a solid number. Look, this job number certainly is always a critical number for US bond yields and obviously for currency trading and equities as well. So no doubt we're going to finish the week with a little bit of fun and volatility. Other than that, look, good luck with your trades to start the week, and we will check back in with you shortly.